want to get into the house flipping game, or you're into real estate investing already, then California may be a state that you just want to avoid altogether, because there is a crazy new tax proposal that is just going to completely kill all profits from doing any kind of real estate investing or house flipping in the state of California. And if you don't live in California, guys, I want to invite you to still watch this whole video, because I guarantee you that if this kind of stuff starts happening there, it's going to spread its tentacles all over the country into other states that love these kinds of crazy new taxes. On today's video, I'm going to go through an example of what it looks like to invest in real estate in California in this post-crazy tax world, and what you should do and where you should go if you want to invest in real estate and flip homes. And heck, even if you don't want to flip homes, but you just want to buy real estate and not have to worry about paying a crazy new tax on the back end, I'm going to show you what that looks like. Let's go. Hey, what's up, my friends? Thanks for tuning in. I'm Dima. On this channel, we talk about real estate, business, entrepreneurship, freedom, and fun. So here we go. On your way in, first things first, hit that like button and subscribe to the channel so YouTube shows this video to a bunch of new people that'll then subscribe as well, and we'll continue to spread the message. So today's video, we're talking real estate. California is implementing a crazy new tax. Do you believe that? Do you believe that California is doing some crazy things? Remember, I used to live in California and I got out because of all this kinds of nonsense. But anyway, California is instituting or attempting to institute a new tax that would completely abolish house flipping. And what it would do is impose a 25% tax on the profit that you make on the flip or sale of a house when you sell it within 3 years. And actually, even past 3 years, the tax does go down somewhat, but it still stays imposed. And I'm going to show you exactly how this works in terms of an example and monetarily what this actually looks like for someone that wants to do a house flip or a renovation or something like that. Now, that is a business that I'm in and that I know a lot about. And so what I have to tell you is that this tax would just absolutely kill all real estate investing and all house flipping in California. So let's actually take a quick look and see what the bill actually says and just how crazy it is. All right, guys, so here's what it says. Assembly Bill 1771, authored by Assemblyman Chris Ward, a Democrat in San Diego, what do you know, would impose a 25% tax on all net capital gains from the sale or exchange of homes or properties. While the tax may be reduced if significant time has passed, those qualified taxpayers would buy and sell a house within 3 years would need to pay the tax, and all revenue from the tax would go to the Speculation Recapture Community Reinvestment Fund. I wonder where that money is going to go. The bill, also known as the California Housing Speculation Act, would also take effect immediately as a tax levy for all taxable years beginning in 2023. AB 1771 would result in a tax change, and therefore 2/3 of each house would need to approve for passage. Now remember, California is a heavily Democrat state. They have the votes for this if they want it. So Assemblyman Ward wrote the bill to specifically target short-term investors who buy homes and other properties, keep them, and then sell them at a profit sometime later. That includes house flippers who renovate properties to sell back, speculators who often outbid other buyers in the hopes that home prices rise significantly, and cash-only buyers. Now, his rationale for the bill is that speculators are taking gobs of tens of millions of dollars out of the community through the cumulative effect of all these transactions. That's not fair, either because the people are left struggling or people who get outbid or trying to get into a home. It would be an additional income tax on the profit gained from a sale that occurred within 3 years of the previous sale. All right, guys, we got a lot to unpack there. Let me talk about this. So California has this interesting theory that as people leave, I've done plenty of videos about the mass exodus out of California. As people leave, instead of trying to figure out a way to bring people back, what they do is they say, no, guys, what we're going to do is we are going to tax the people that are left. To me, that is just crazy. You know, instead of coming up with cool ideas to bring businesses back, to bring people back to the state. I mean, heck, I'm the perfect example. I left last year because of all of the reasons that I've talked about. I'm not going to rehash them, and I couldn't be happier in my new state of Texas. But Texas, for example, does a lot of things to bring businesses in. tax incentives, making a business-friendly climate, lower taxes, all these kinds of things. California, on the other hand, says, no, we don't care. You guys can keep leaving. What we're going to do is we're just going to overregulate and overtax the people that are left. Well, what do you think that causes, and what do you think happens when you do that? If you guessed people are going to leave even more, the mass exodus will get even worse, then you are probably right. So putting aside all of the other things going on in the state, all of the policies that aren't working, the homelessness, the crime, blah, 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 all that other stuff. If we just talk about taxes, guys, if you just keep taxing people more, you just keep increasing the taxes, what happens is that people get frustrated and they leave, especially people like home flippers. I mean, look, it's no secret that the California housing market has gone up a lot. But the answer is not to just tax more of the profit. The answer is to figure out how to make more housing, how to make housing more affordable, how to build more affordable housing. Of course, California is not interested in that. The California Democrats are only interested in more regulation and more taxation. Guys, I'm here to tell you that is not the answer. That is not the solution. And that is just a terrible way to govern. Let me show you an example so you could see exactly what a dramatic and drastic effect this would have on people that want to flip homes in California, of which there probably won't be many left. And by the way, I mentioned it earlier, guys, even if you don't live in California, it's definitely a video you want to check out because all the crazy stuff that starts in California when it passes, people in other states, especially people that lean left in other states, say, ooh, that works in California. Let me try that in my state. So you got to make sure that this kind of stuff does not start proliferating through the country. Let's take a look at the example. All right, guys, so let me show you an example. This is what it would look like if you were to, say, purchase a property for development for flip. So let's just say you're in California and you buy a house for $750,000. You put about $250,000 into it to rehabilitate it, which is pretty normal on a flip. I do these, and this is, kind of a standard flip. So you've paid in $1 million on this property. On the back end of the property, you end up selling it for $1,250,000. So a little bit above what you paid. Pretty normal numbers here. You have about $75,000 in closing costs. That would be realtor fees and sales taxes on closing in terms of your county, city taxes, escrow fees, stuff like that. So your costs are going to be $1 million, which was up here, leaving you a gross profit of $175,000 on this deal. Okay, so, in essence, you're making a decent profit margin, maybe somewhere around 17, 18%. Maybe that took you like 6-7 months on your flip. That looks pretty good. Now watch what happens in California with capital gains taxes, okay? Now what I'm using here, guys, is long-term capital gains taxes. That is over a year of ownership. If you're under a year of ownership, that's going to get taxed as ordinary income. So we're not going to look at that example. But let's take a look at capital gains. So first and foremost, you have your federal capital gains tax. That's 20%. That would be $35,000. Then you have your California state capital gains tax. That's your normal California state capital gains tax. That gives you that's a 12% tax, $21,000. Then California also imposes an additional capital gains tax if you earn, I believe, over $1 million. We'll add that in 1%. That's another $1,750. And then, guys, here's the big one. A new 25% tax on your profit. That's another $43,000. So in total, guys, doing this flip in California is going to cost you over $100,000 in taxes, or 58% of your gross profit. Now, I got to tell you that is just crazy. And if you were to do this deal in California, the ultimate bottom line number, your net profit on this deal is going to be $73,000 for a profit margin of 7%. Now, guys, if you did this deal and you weren't in California, let's just say that you did this same thing in Texas, you would be chopping off $65,000 of that, because you still have to pay the federal capital gains tax. But in terms of all of the state stuff, you don't have any of it. And so instead of earning 73, you're actually going to be earning over 130,000, or you're doubling your profit on that deal if you can get the same numbers to work somewhere like Texas. That is just crazy. Now, guys, California's justification for this is that, people are getting outbid for homes. And, so what we need to do is we need to tax people more so that, they are disincentivized from investing in real estate. Well, guys, I got to tell you, a lot of house flippers add a ton of value. They buy properties that maybe no one else wants. They fix them up. Then they sell them for more money to people that want done homes. Some of these houses are not houses that people who want to live in them will actually buy, or maybe they don't have the money to rehabilitate them. And ultimately, guys, what this really does is it disincentivizes business and disincentivizes capitalism. And I've said it for a few years now, and I will continue to say it. The answer, California politicians, to your problems is not more taxes. It's not more regulation. You guys have the most beautiful state. It's an amazing place to live. And yet people are leaving in droves. Why? Because all the policies that you're implementing don't work. I don't care what you want to call them, Democrat, Republican, left, right. At the end of the day, the stuff that's going on in places like California is not working. And that is why, guys, places like Texas are thriving. So if you want to get in the house flipping game, if you want to get into real estate development, or maybe you're someone who wants to do passive investments, California is unlikely to be the place where people go for real estate. Well, guys, if you like this kind of stuff, if you enjoy learning about new laws, new taxes, new regulations, and things affecting the real estate, the business, the entrepreneurship space, then make sure you subscribe to the channel and hit the like button so YouTube shows this to more people. Check out a few of these other videos on the channel that I think and that YouTube thinks you're really going to like. Until next time, I'll catch you on the channel. Thanks for tuning in.